Small caps have been hit hard. Small caps have not benefited from a lot of the rallies we continue to see, or strength we continue to see in Dow or in transports or industrials. So what is the deal with the Russell? I'm going to show you two ways to take a look at the Russell, two ways to trade it, and the timing and levels for both. Okay? All right, so what say you, Russell? First of all, KRE versus IWM, KRE wins. KRE wins. I will prioritize the KRE. Second, Russell is in distribution chop. What does that mean? Wide choppy range. You can see it right here. What is the Dow market stage we are in? Distribution. Okay, if you're a Richard Wyckoff fan, same thing. 6 of one, half dozen the other. This is a choppy market and a very common transition of a broken up trend. Look, gang, broken up trends are not downtrends. Broken up trends are distribution. So we have a distribution market, and within this distribution market, because the preceding trend was up, we have bullish bias. So I may not have a trend anymore, but I definitely still have bullish bias. So we have that going for us. The trend that was up, so this distribution chop is going to inherently have more of a buy side bias. Now, I'll use some handy dandy Darvas levels. These are automated levels inspired by Darvas. That's why we call them Darvas 2.0. And the closer I can get down to these previous lows, the happier I am. Now, the V-score is getting very close to getting to a low that we bounced off before. So at current levels, which would be about 2135, 2135 in the RTY, for me, equals looking at some KRE calls. Why KRE? Because regional banks are quite heavily weighted within the Russell. I mean, nothing is super dominant in the Russell because it is not a high concentration weighted ETF. So KRE looks better than the IWM. So at the aggressive level, this is an aggro level, in the RTY, notice I'm using the futures to set up the IWM ETF alternative, right? I'll look at KRE. The closer we get to 2100 in the RTY, the more I'm going to be looking for an oversold IWM call. See, that's where that makes a lot of sense. And this is where, again, if you've got a slow stochastic, my preference is a 21K 3D, or if you've got the ready aim fire, let's see those start to show that we're at a range extreme, that we're at those lows, oversold, and we'll look for the long position. So let's look back. Now, there's another thing we can do, and let me take you on over to the TradingView charts that I love. I don't have a lot helping me out volume-wise down in that area. That's unfortunate. I really don't have a lot, and I was hoping for it. So the other thing I would look for is I would look to see where there might be a nice volume ledge. There'll be volume at 2100. It may not be popping up right now, but there will be volume at 2100. The closer we get down to that level, we'll just start to see, because traders love those major psychological levels. So that's the way I would break this down. Just like that. Looking at the Russell down in that zone, starting now with the KRE and then moving into IWM calls. But respect this distribution chop. If you're looking for a momentum breakout, you really want to see that we're in accumulation. You really want to see more of steady blue grab candles if you're looking for a breakout. If not, because it's wider and it's distribution, now this switches to that oversold buy. And that's what we're setting up, both at the aggro to the conservative level.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me